Hi, I'm Pat McGibbon. I'm here to talk about what's going on in the economy that has an impact on the manufacturing technology market. Industrial production numbers came out on Friday, and the IP index compares what current production levels are to some point in the time in the past. And the current reference point is the year 2012. And really, 2012 was a pretty good year for most of our customer industries. In fact, it was practically the peak production and investment timeframe for the oil, mining, and gas exploration equipment industry. In late 2018 and early 2019, oil and gas and mining equipment was at 55, which means it was about 45% off from the 2012 levels. Today, it is at 41, just barely above the low of 39 in 2016, but nearly twice as good as it was at the all-time low over the past 50 years, 22, set in January of 1987. But enough about the bad news. Let's talk about some of the things that are really looking good coming out of the industrial production release. The aerospace industry bottomed out in April at 64 and has been climbing steadily in the past 3 months to 80. That means, that we're working at about 80% of what we were in 2012. And the prospects for the industry are improving. In fact, we had a webinar just a couple of weeks ago, and you can go find this on amtnews.org and take a peek at it. John Heimlich was our speaker on the aerospace industry, and he has some pretty interesting ideas about how well it's going to bounce back, although it's not going to be a quick recovery, but he does see things coming back. And Boeing's announced that they're going to be trying to put 400 737s into service in 2021, delivering them to their clients around the world. And as well, the space industry is really booming. Business for Boeing, SpaceX, and others have really kept a good portion of our job shop industry very busy over the course of the last several months. Many third-tier suppliers in the aerospace industry have also diversified their product mix. In other words, taking a little bit less reliance on the aerospace industry and putting it in some other places like medical equipment and other places where there's precision work, computer and electronics, etc. And this has helped them to maintain their levels at a higher level than they would if they were relying entirely on the auto and on the aerospace industry. So it prepares them to bounce back faster once the aircraft industry begins to bouncing back to as well. So they'll be prepared to respond to increases in production from the aerospace industry. The auto industry is one significant customer industry that, while it is not a V recovery in its bottom line of profitability, we've certainly seen a V recovery in its production levels. Production levels were up 48 points in July from 102 to 150. 102 in June, 150 in July. And again, that means that light vehicle production was up 50% from where it was in 2012 in the month of July. Now, it's the highest level since that data series has been created. So back 50 years, it's the highest point July was on an annual basis, on a monthly basis. Still, likelihood of the industry getting back to its 17 million unit production level for 2020 is very slim. And probably won't occur until we get into 2021. But this has been one of the stronger customer sectors during the pandemic and leading out of the pandemic than we've seen in almost any other industry, other than medical equipment, of course. And it is a stark contrast to where they were at this time last year in 2019, where they were actually one of our most important customer industries that was doing the poorest at that time. Also coming out in just the last few days, the Michigan Consumer Confidence Index for July, came in at 72.5, slightly better than it was in April, but down from June. So, looking back through the numbers and what the analysts at Michigan are sharing, it appears that concern about a second wave is what had us drop 6 points from the 78.1 we had in June to 72.5 in July. But there are positive signs in the indexes, because it's an index that has looks at a variety of different pieces, and you can cut the demographics across. And it seems that people in manufacturing are a little bit more confident about what's going to happen than the rest of the population. Talking about a little closer to home, the July market for manufacturing technology was clearly softer than it was in June. Members have shared that many of their customers have taken plant shutdowns that they usually take in July and August. And it's been a little bit more difficult than usual to call on customers, especially in these times when you have to make plans well in advance and go through certain protocols to get in and see many of the people you want to call on. Now, USMT orders were very strong in June. In fact, June 2020 was practically the same as it was in June 2019. It was off by about 6%. And it moved the bar for the overall trend for the year up by about 10, 20 points, so that we are doing a considerably better year-to-date in June than we were in year-to-date in May. But on the flip side, we also seen quotations in July up significantly. And as we went from June to July, the last couple of weeks of June and the first couple of weeks of July, the conversion rates on those quotations was moving upwards as well. So what else is going on in the economic news that we want to keep an eye on? Manufacturing job openings were up 10% according to the Bureau of Labor Statistics last month, and key customer industries' production levels are beginning to move upwards as well. Hopefully, we'll hear some good news tomorrow on from the housing starts report. Housing has always been one of the top 10 indicators for the outlook of our industry, and we're expecting to hear good news there as well. And then durable goods for the week after that. So until next week, stay safe and take care, and we'll hopefully have even better news to share with you next Monday.